What's going on, traders, and welcome to this week's episode of the Weekly Watch List. In the weekly watch list, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we always look at the same core companies: Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. You'll notice that many of these companies have earnings coming up, as noted by the blue and red dots there, so it's something to consider. Next up, we do have our quick fire round candidates, which the Discord members have voted on. If you want to be a part in voting on next week's options, feel free to join the Discord. That is linked down below, along with all of our other free resources. And last but not least, I'm sure everyone wants to know who is the winner of the $5K $50 giveaway. Let's spin the wheel. I do want to say thank you to every single one of you guys who has been subscribed, who comments on the videos, who's just been a good member of the community ever since the beginning. So let's see who we've got. Very close. Wow, it looks like, okay, so Tony Rome is going to be our winner here. So Tony, I will reach out to you and we will get you that $50 via PayPal. Checking out our SPY weekly chart, talking about candle structure and location as always. For structure, we've got a large full-bodied green candle with very small lower wick and very little, little to no actually upper wick at all. So noteworthy that the bulls were able to close this thing up at the highs of the session. They were in control, looks like, the entire week. Next up, if we look at the location, clear close above our double top there. And in terms of a candle by candle analysis, our highs have been getting higher, right? So high here, higher high, higher high, lows, higher low, higher low. So we are now in a candle by candle weekly uptrend here. I was saying we were in a downtrend the past few weeks because, again, by candle, this was a downtrend, lower lows and lower highs. Obviously, in the longer term picture, we have higher lows that continue to form, something like this, higher highs that continue to form. I'm certainly not going to argue that, we're in a downtrend in an overall weekly analysis, but candle by candle, which again I think is most important for looking at shorter term or shorter duration trades, we are in a new uptrend. One last thing before we move on and look at some levels in terms of the Fibonacci retracements that we've sort of kept an eye on during this most recent leg up and pullback. We did defend that 61.8. We've held it strong, but most importantly is that we've now closed back above our 38.2 and firmly, right? It's very far above, almost halfway between our 38.2 and 0% retracement. Another way that we can look at this, it might make things a little bit more clear, is if we go from the high here and drag it down to the lows, what you'll notice is that we've closed now firmly above our 61.8. And in terms of what you don't want to see for continuation of a downtrend, or anyways, the direction of the Fibonacci's really is a violation of that 61.8. So if we wanted to see more downward action here, we should have been rejected at the 61.8. But with a strong acceptance above, again, that pairing with the capture of the 38.2 from our other analysis of the Fibonacci's, again, a 100% retracement wouldn't be out of the question. I'm not going to say it's a guarantee, but based on everything we're looking at here, it could be in the cards. So moving into our daily time frame now and looking at some key levels, I do want to talk about why we are where we are here. First is we talked about the inverted head and shoulders that was going to play out in the market, or we thought might play out, and it did indeed happen. So we had a neckline that looked something like that. We got the break above, and that's one reason why you could think that the market went higher the last 3 days of the trading sessions here. Another thing we can look at is the fact that we broke out over our pressure cooker top. We've had a strong close above, or anyways, noteworthy value established above that level, and then the next day we had a gap up and hold. So that's noteworthy as well for the bulls. We've held this gap. So in terms of levels we have to the upside, clear resistance as noted by previous support at the 349.25 level. Anything after that, and again, I think the move back up here, that 100% retracement of this downtrend, could be in store to 358.63, just because in this red candle, that's very emotional selling there. That's a lot of hitting the button, if you will. Very little market structure. I think that offers very little resistance as we get into that level. So watch out for that on any strong move to the upside. Again, let's just cover why we're sort of here where we are. We have a gap that remains unfilled to the downside, so watch out for that to potentially be repaired. Anything under that 344.89 fills down to 343.85. Underneath that, we should see strong support now that we've closed above that pressure cooker top at 342.50. That's sort of my line in the sand, if you will. If we do start to go lower, I really want to see that hold on any sort of pullback. And the reason being, I'll just get to this right now, is that Tuesday, of course, we had a strong down day in the market. It was what we call a liquidation break, and we call it that because it was retraced 100% to the upside. So what this has done was anyone who got short during this massive move to the downside expecting follow-through was wrong. They were wrong. There was no follow-through to the downside, and as a matter of fact, we had a poor man's gap up the next day, meaning that we gapped higher than the close of the prior day, opening higher, right? Happens very often, but not a true gap. So this should have taken any short-term sellers out as there was no follow-through. I'm sure people were looking for the gap fill here. It never happened. So any short-term sellers should be out of the market at this point, as noted by this liquidation break and 100% retracement to the upside. Again, poor structure does remain above, so some repair there and potential pullback into this level would be appreciated. But if anything gets more advanced or accelerated rather underneath our 342.50 level, watch out for this one first as support, 339.08. That's our previous all-time high. 50 SMA, this blue line here, should start to coincide depending on time of week, anything underneath that, and we're going to adjust some of these levels here. This doesn't seem as prominent or relevant as it used to be there. We'll get rid of that and then redraw or sort of just extend rather the top of our gap. That looks really like the key support that we want to watch out for in terms of a larger picture potential breakdown. So something like that. Here is the support level at 331.30. Anything underneath, again, the gap fills down to 329.56. That's quite a ways away. I wouldn't count on that happening this week, but those are some downside targets for you. Jumping over to our Qs now, I'm going to clean this up and we're actually going to look at our Fibonacci's just to see where we're at. So in terms of the pullback that we've seen just now, going from here to here, I do just want to make the clear distinction that we have not cleared above that 61.8 here in the Qs, and NASDAQ, isn't potentially setting up as bullishly to recapture that all-time high. That's just a quick note that I wanted to make there. Let's pop our levels back on and look at what we have in store. So we did see that little hiccup at our 282.66 level on Thursday, but then cleared it quite strongly on Friday. So right now we're sort of in a very little resistance zone. That 61.8 is just overhead. That might provide some resistance, but in terms of clearing it, there's really a little ways to run until we get up into our 292.73 resistance, as noted by some of the congestion on that section of the chart. Anything after that, again, is the all-time high at 303.50. To the downside, though, if we get any sort of rejection, which I don't think is the play, just because we have our clear head and shoulders inverted here on the chart. This is the key breakout point. We're now starting to break out above it. It looks bullish, right? So levels below just to have as support in the back of your mind. Anything under our 280.26, watch out for that 50 SMA to start to provide super support if that is the move. Any sort of pullback, I think, should hold that as support. But if we go lower, look out for this area in here of the chart. That's at 272.70. And then lastly, our next set of lower lows in here at 262.62. Last but not least, checking in on IWM Russell 2000 and our small caps. It doesn't take a Fibonacci tool to really tell us that if we look at the move from high to low, this little pullback here, we are now trading above it. So 100% retracement of the move, much more bullish than everything else that we've looked at. Obviously, this run here is quite impressive in the small caps, really signaling risk on, if you will. But now that we're coming into our 164.18 resistance, it would be ideal to see this thing cool off and sort of form a daily bull flag, something in the likelihood of this. What we want to see happen is it firstly, anything above 160 would be ideal, picture perfect. Anything underneath though, and we want to see it really hold this level here at 158. That's sort of the line in the sand for value being established higher, potentially setting up a breakout over 164 to move much higher into a 169 target, and then up and over that. So that is sort of the bullish case if we see that happen. Again, we've marked out those key levels, want to see 160 and then 158 hold, but if it does break down and we see movement lower in small caps, 50 SMA is going to start to catch up and provide support intraday somewhere in here. Watch out for a first touch bounce, but anything lower, we have our 153.37 level. I don't really want to cover the 149 level, but it is in play, if that breaks. To the upside, though, we talked about that 169.04. Anything after that is the all-time high, up around 173.39. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and consider subscribing to the channel. That way you know every single time a new video comes out. So jumping right into Apple, what you'll notice is that we actually have a tight consolidation range that looks something like this. And I don't really think there's any action to take unless we either break out higher or break out lower. There's no real direction that's been established right now. It's really just a sideways trend the past few weeks. But what we are looking at is the inverted head and shoulders, right? The rest of the market did see it play out and break the neckline. Apple here has not done that yet, so our neckline looks something like this. came right into it on Friday and stopped. So based on the rest of the market and the direction sort of being up at this point, I would favor a breakout over this area into the 119 resistance here. Anything higher, and we're looking at a move into our 124.50 area and then 128.76. So that's the bull case there, and I think it might be the likely one to play out. But if it doesn't, watch for a move underneath our 50 SMA again to flush the lows here at 112.32, in which case that'll probably be super support, depending on time of week there with our rising support trend line. But if it breaks, watch out for a move into the lows of the head portion of the pattern at 106.23. So on Netflix, we're actually seeing the cup and handle pattern play out here. It's one that we don't really identify very often, but it's really just a rounded bottom, something like that, and then you stack a bull flag on top of it. I know that line's sort of off there, so the bull flag is here, right? So that's all the cup and handle is, and we're starting to see that breakout higher now, but some indecision has formed on Friday before we've come into our targets up here at 548 and 557. So what does that mean? If we see any sort of pullback here, watching out for the 529 level to hold, since we did close back above it even on the dip below on Thursday. But if that does give, again, next support below is at 521.60, and then our cluster set of lows in here at 503.87. 50 SMA is going to start to curl up, and it might provide a first touch bounce in the intermediate area. But if we do hold at 529, I think that provides a bullish case for value being established higher, and again, a potential another retest of our set of highs from in here. One thing I do want you to keep in mind is that this one does have earnings coming up on the 20th of October here. So, as we trade into it, just keep your wits about you. IV will start to expand. This is not something you want to hold through earnings, as it's really just a shot in the dark. It could go one way or another. Here on Tesla, again, keep in mind earnings on the 21st, so in that same general sort of cluster as Netflix, if you will, but we did adjust our resistance trend line. There has been no clean break and follow through above it, so that's what we're sort of waiting for here. Now that we're consolidating quite nicely against it to the upside, we haven't really tested the support trend line very much, but a lot of touches to the upper resistance portion. So if it breaks, all these touches start to build up pressure. It's almost like a pressure cooker top, but just on a resistance trend line. If we do get the break, we're really watching for that follow through the next day to confirm that the break is real and we're not going to come back down into range. So targets to the upside, 455.72, and then the all-time high up at 502.49, because as like many of our other charts, very little market structure in that general area. To the downside, though, our line in the sand is going to be this support here at 412.33. Anything underneath, if that flushes, you can imagine that it would be a first test once again of our support trend line, 50 SMA on the daily time frame. I would expect a bounce out of that level, but if it flushes and we do see lower, look out for a support zone to come into play, as noted by some of our support that's happened in this general area of the chart at 369.85 to 360.69. So Alibaba is an interesting one because we do have this, not earnings, but a power gap is what we like to call it, gap up. That gap has held. It had the chance to fill, right, on this pullback here. Sellers could have stepped in a little bit harder and potentially filled that gap, repaired the structure, but it was not the case. That's a bullish thing because that did not happen, and we've seen follow through to the upside. Right now, sitting at a current double top at the all-time high, 302.61, with an inverted hammer candle there on Friday's action. So I would expect some sort of pullback, potentially into our 292.33 area, just because you can see that low of that red hammer right there was right at it. So watch out for that on any pullback. If we go lower, again, watch out for the top of the gap there at 283.76. But generally, I think, this is a pretty bullish setup here, especially when you hold the gap and continue much higher into all-time highs. That's really noteworthy, right? So we are watching for sideways consolidation and then potentially another breakout into that blue sky territories, in which case whole and half dollars, as well as any intraday levels that do form. So on Facebook, this is actually really interesting to me because what we have is rather a head and shoulders as opposed to the inverted head and shoulders that the rest of the market is sort of showing us. So this is what I'm looking at here. The neckline on this pattern is going to be in here at 247.16. So on any strong break of that, again, keep in mind that this is really just a big gap down here. So the gap could fill all the way down to our 234.69 level if the move is lower, on a longer time frame analysis here of Facebook. So watch out for that. The key is going to be whether or not this value up here establishes higher. We don't really have that inverted head and shoulders. This is really sloppy if we call that, and that, the inverted head and shoulders. But I think the resistance trend line might have some merit. So we're going to draw that in, something like that. You can see we're struggling with it right now. On Friday, we formed a small hammer doji. 50 SMA is still looming ahead. There's a lot of resistance in this general area of the chart, especially as noted by over here, that if we get a breakout, great. Expect the move up to 278.97 quite quickly. But if it fails, then again, I think that sets up the case for that longer term head and shoulders. Here it is one more time. And then eventually flushing underneath that 247 level. So NVIDIA continues to be one of the strongest that we look at. Again, reason being, we just continue to establish value higher. We're still well off of our support trendline and 50 SMA, so no real concerns on that breaking or flushing anytime soon. It looks like there is a key support that's been formed somewhere in this general area of the chart. Let's just map out, what I think that's going to be. That's going to be here, right around that 546.78 level, just because we have double bottom as well as high from that green candle there. If it flushes, look for a move back down to our 531.93 level. But again, being so bullish here and really establishing value, even though these candles are red, I think the move might want to be up. So resistance is going to be there. Let's get rid of this line. It's no longer really in play. That's the more realistic zone that we're looking at now. So breakout over our 564 level could put us up at all-time highs around 589.07. Microsoft looks incredibly bullish to me, and do remember that earnings again is going to be in our initial cluster there at the 21st of October. The reason I say that is because we have a consolidation zone, something that looks like this, really tight, right? And here we had the fake breakout that one day and then failed back into our range, and now we have a strong move above quite clearly into our resistance there at 215.77. So watch out for any move higher. You can see all the pressure that's still building up below this level, right? It doesn't go away. So all this pressure is still built up here. Watch out for the breakout higher into our 224.64 area. Anything above that, and we're looking at all-time highs 231.15. And based again on the structure of this candle, I think that's a likely scenario. The 50 SMA is providing support below now, so watch out for that to provide super support into 210.62 on any sort of pullback there. But again, I don't think that's the case. This is a continuation candle. Anything underneath and the consolidation lows are in play at 206.82. If that flushes, again, I don't think this is the case, but I want you to have the levels, especially with earnings coming up. 202.16 is next up as support. And last but not least, for our core companies, we have Amazon, and what we're looking at is very similar to Microsoft with a strong breakout above our 50 SMA there on Friday, but we didn't come into resistance yet. So target is still going to be up here, 33.43 at 58, big numbers now. And then coming into our next one here at 34.50, and then the all-time high. That's the setup to the upside if all of these resistances are cleared. I'm not saying that there's not going to be any pullback there, but that is the bull case. Again, earnings here, let me just double check on the 22nd. So again, towards the initial cluster of earnings announcements, we do have a new support trend line in play that could look something like that. Let's draw that in because I do think it wants to be something we watch out for on any sort of pullbacks. So watch out for that to potentially be buyable. If we pull back into that area and then continue higher, that would be nice. That's what we like to call tagging up, right? So we see an advanced consolidation pullback, advanced consolidation pullback. That's what we want to use that support trend line for. To the downside, if it breaks though, 50 SMA, super support, all this support in this general area of the chart at 31.81. If that breaks, look for a flush into the lows of this consolidation at 31.05, and then really it's a little ways to run down here to the lows of this at 29.23. First up on our quickfire round is going to be CrowdStrike. It looks like we have clear resistance as noted by these three upper wicks right around 148.25. Anything underneath our support is going to be at 142.81, and then the next one below is here around 134.20. To the upside, we also have the all-time high that we want to mark in and be aware of there at 153.10. And I do want to point out the fact that we're in a very strong uptrend, and when you're in an uptrend generally, you can buy any touch into a support trend line, and look at that. We're coming right into it right now here. What I meant by strong uptrend is just look at the distance between that 50 and 200 SMA, very strong there. So if we do see the move higher, which I think is likely based on all of those things we just discussed, we have targets mapped out. Uber is up next, and we have clear resistance in this general area of the chart. I'd call it 38 the whole dollar. It looks like we had a couple of fake breakouts as noted by those upper wicks there. Next up, this is looking like a key level to me at 34.20 just about, and then we have a support below here on that first major pullback after this run there. So watch out for that to the downside. I would even call this in here an area of support as noted by a few of these touches that we're seeing at 36. Let's just round it to a nice whole number. But the pressure cooker top here really looks like it wants to break out, especially with these fake wicks above. When that happens repeatedly, it looks like buyers really want it to go higher, but just don't quite have the strength yet. So with time that goes by and as buyers strengthen up, I think the breakout could be in store, and it looks like our all-time high is back here around 41.86. So checking in on ZM, we've done this one in the past a few times really, and what we're going to do is just extend some of these lines to see where we're at. It looks like this can be adjusted to go somewhere like that. It looks like we're starting to see that breakout, right, by going above our support trend line, but I don't think we're out of the woods yet until, just like Tesla, we really see that strong follow-through day to confirm to the upside, that is the direction that we want to head. I do want to adjust or at least draw in some resistance areas, right? So we're currently sitting at one, as noted by some of these resistance points in here. That's at 501.39. If we go higher, Again, it looks like we're just going to walk up the highs of this symmetrical triangle, right? So 519.26, and then the all-time high, of course, at 529.74. To the downside, though, if this level flushes at 477.47, then you can see there's a little ways to run. We're going to do the same thing to the downside. There's really support here at this 463.19, and then here at the low of the very first one there at 457.64. I know that's a lot of levels, but based on the y-axis here and intraday trading, I think those could certainly give you a leg up. AMD back by popular request once again. Keep in mind earnings coming up here towards the end of the month in October, the 27th it looks like, but what's happening right now is a nice pullback into that 50 SMA here on the daily time frame. Generally, that's a buyable pullback, right? We've come out of nowhere down into it. Generally, unless we're in a strong downtrend to begin with, that is a buyable pullback. So I would be, looking to see some reversal candles start to print here on the daily time frame. If we can recapture our 83.37 level, look for a move back up to 87.36. And then, of course, over these highs and here is up to the all-time high. To the downside, we do have targets mapped out, though. That 50 SMA flush could put us down at 78.60. Anything underneath, just look at these beautiful lows in here, all stacked at 74 the whole dollar, and then gap underneath here to 71.64. Etsy is a popular chart that we've looked at inside the Discord chat, but we haven't really marked up in terms of YouTube analysis. So what we have here is a previous set of resistance in this general area of the chart, of course, there, as well as up here. We'll just mark it out so we're aware. And now we're in blue sky territories. What we have below for supports, it looks like this is a key area, and then after that, really, let's just be a little bit more realistic in terms of major levels, not nitpick here. We have that 109.27. So what we were looking at is blue sky levels, whole and half dollars, intraday levels that do form. If we do start to see any sort of pullback here, watch out for all of these to hold, right? I would expect that on a pullback, that is a nice one that you should be watching out for, 133.39. If we start to see some reversal candles print around that area, again, looks good for a ripe breakout to the upside. What we're watching for is really some bull flag consolidation before the next leg up. So DraftKings, as soon as I talked about it in last week's video, boom, it went to the downside. So again, what I said was if you're long, stay long and potentially start taking some profits up here. But if you're not long, don't chase this thing. And if you chased it, I'm sorry, but ultimately that's what you get for chasing something that's a balloon like this. So what we're looking at is a deep pullback all the way into these lows here. What we have to keep in mind is if we go lower and get acceptance underneath our 49.16, then we set up the potential for a head and shoulders, right? So if we bounce and see the head or shoulder 2 form in here and then retest, that could potentially be a nasty setup to the downside and flush us into this 43.88 level. Again, I don't think, this thing it was news driven, right? It had a huge pop and then it issued some shares at a lower share price. And now, this thing's just chopping around. So I'd wait to really see some resolvement if you want to get it back in long here. This isn't a viable pullback yet. There's no clear reversal candles that have started to print. We're coming into a key level. You'd really have to wait and see for more information here, but we do have levels up and down. I do want to map out the all-time high up here, 64.19, so we are aware if it comes back up, as well as this one in here is looking pretty interesting at 58.94, so 59. Plug, another one that we talked about, clear breakout above our level here at 14.20, and now we've seen a nice move to the upside. So watching for it to cool off a little bit, maybe form a bull flag that looks something like that, and then see a potential breakout over 19 the whole dollar to potentially run and continue into blue sky territories. No real pullback levels here, so what we'll do is break out the Fibonacci's, just really look for what level could be in play. So if we go from low to the high of the move, you really want to see it hold the 38.2 first, and that's at $16 the whole dollar mark. Workhorse, really impressive day there on Friday, clearing back up through our resistance at $25 the whole dollar mark, and next up is going to be our 28.17 level as noted by this high. Anything after that, of course, all-time highs, 30.99, let me get the right tool, 31 just about if we round that up to the nice whole dollar there. So those are upside targets, and with a nice green candle like that and on strong volume really on Friday, I would expect more continuation to the upside. We did break a very steep resistance trend line, right? If we draw on something that looks like this from there, it was, being held down, kept prices held down, and boom, we got the strong break above now. So I think upward action is in store. So we haven't really talked about Home Depot or any of the home builders really on the channel, but they did show some pretty intense relative strength this week. So what we're looking at in terms of levels, double bottom in here, looks like some resistance right where we're sitting right now at 287. We have the all-time high up here, and that's going to about do it, right? So we've come right into our resistance. It's starting to form a pressure cooker top. If it breaks, boom, into our 290, 295. Anything after that, blue sky territory is $1.5 intraday levels that do form. On any sort of pullbacks, watch for that 50 SMA on the daily time frame to provide support. It's also sort of coinciding, or just above anyways, a key level as noted by high, and then support at 275.50. And last but not least, we have Twitter. What we have is a set of highs, all-time high of 47.87, set of lows that look to be holding quite strongly right there, sort of forming a bull flag consolidation, if you will, if you draw in the flagpole and then something like this. So we want to see it consolidate and potentially chop around this range and then make another move to the upside. That is the favored breakout there. We do have a set of 3 highs right around 46.48. Watch out for that as resistance, but if it breaks, again, boom, swift move up into the all-time high. If this fails, though, here, it looks like next support below is really going to be down here around 42.80. So that's going to be it for this week's episode of the Weekly Watchers. If you enjoyed the video or learned anything new, then feel free to let me know down below in the comments section or by simply leaving the video a thumbs up. And with that, I wish you a green trading week.